Hey everyone, welcome back to market structure. So we mapped the 15-minute market structure with the green lines. Now, as you can see here, it does fine-tune this quite a bit more. It's hard to really see it, so we're going to go down to the 15-minute time frame and just look at how it all correlates together. So, as I was saying in the earlier video, the 15-minute fine-tunes the 4-hour for us. So what that means is we have to think of market structure as we're always pro 4-hour trend or we're counter 4-hour trend. If we are a counter 4-hour trend, we can expect the pullback to end quite soon. If we are a pro 4-hour trend, as usual, we can continue on quite a bit longer. Now, in the management concept, if we are going pro 4-hour trend and we decide to take something in here because it broke this 15-minute structure, we can say that if we do get in here and we're going up, we can pay ourselves here at a bare minimum, and ultimately we always want to be targeting the 4-hour highs. So for myself, it would probably look like something along the lines of 70% of my trade, maybe 80% of my trade gets closed out here, and I would leave a runner on to run the 4-hour high, as that is never guaranteed. The market can do something like this, come back down, and then go up. So we always have to have a method to pay ourselves, and whatever your method is and however you want to do it, you want to stick to those rules. So now, here, as we broke 15-minute structure and we turned bearish, we can expect a pullback on the 4-hour. So we'd actually be able to get in this trade a little bit earlier when this demand fails, and you would have likely caught something either in here or off of this supply zone here that ultimately caused all these demands to fail. With that being said, this is called a flip zone. You would have found something here on the 1 minute to get in. If you didn't want to play with the 1 minute, you could have took the whole 15-minute. However you want to trade, it's totally up to you. I'm going to be teaching in this course how to get into stuff on the 1 minute. If you choose to take the whole 15-minute candle, that's totally fine too. You may choose to refine on the 5-minute and get in. That's totally up to you, but in this course we'll be teaching the 1 minute just so you can get the most risk reward out of every trade. So once again, once this impulse happens, we expect the pullback on the 15, and generally you get at least another impulse and can aim for this. But knowing that this is counter 4-hour, if this trade did keep on doing something along the lines of this, where it kept on going down, you would likely not keep taking shorts in this area, as the 4-hour pullback is likely to end. The premium versus discount array will help with that, and that is coming up in one of the next videos you'll be watching. So once again, here we create another 4-hour low. We take the high, and ultimately something in here or something in here caused that. So we'd be looking at these two zones as possible demand zones to get in and continue going on up. Now, at this point, if you do take a trade here, you are bearish on the 15. So what you could say is maybe take it to either this supply, or you could say this demand here is clearly holding. We just wicked above that. We're showing intention to go up. Maybe you could start formulating the idea that these highs are becoming weak and you want to run that. But at this point, being counter trend, you wouldn't automatically try to shoot for the moon. Now, whereas this structure point is created here, once you turn bullish on the 15, we can assume that the bullish order flow will continue. And if you get in somewhere down here on this demand, you would pay yourself here, and once again run the 4-hour high. Now here, we change order flow to bearish on the 4 hour for a 4 hour for a daily mitigation. That's totally fine. The way you would play that is once you took this 4 hour low, we would continue at least one more impulse down. So our expectation is usually the impulse is coming to, not always. With this 4 hour trend not being confirmed, you would still be open to buys at this point. Now, once this 4 hour goes down and makes another low, at this point you become confirmed. So you would be more looking at the short side of things. However, if you go to the daily time frame, you would understand that this could be just a daily mitigation. I also noticed that we did miss a couple of dots on the mapping side of things, so I did add them in as I went. So here we once again realign with the higher time frame, with the daily order flow. This 4 hour high goes. At this point, you would basically continue on taking loans. And obviously, you don't expect to take all of these highs the way it happened here. You would expect there'd be some sort of a pullback, but as I was saying before, if the market is not showing you any signs of changing direction, what I mean by that is this whole time demand's in control, in control, in control, in control, and ultimately these demand zones never once get violated. So as long as these demand zones do not get violated, you keep on following order flow and keep on buying. And ultimately that's what we want to do with the 15-minute time frame. And what it does for us, as you can see, when an impulse ends, every time the 15-minute order flow changes and we become bearish, you could start creating an idea. Maybe there's some sort of a pullback. Sometimes market structure does get a bit messy, and that's where you'll start using changes of character and flip zones as well to help you map trades. That is coming up in the next sections as well. But you could see ultimately here you get to a point where the market is just not willing to break this point. So what you can say here at this point is supply is clearly in control, and as soon as this first break of demand happens and you turn bearish here, you would instantly have a short bias again as to realign with the higher time frame and anticipating that pullback. So a general rule of thumb is, like I said before, let's say for the sake of easiness this was 100 pips. You could generally say that the retracement will be give or take 50%. I will talk about this in the premium and discount array, and that's kind of how we can map. So again, if you, let's say this was 50% and you got down here and your order flow is bullish on the daily and the 4 hour, you would not continue taking shorts here. You would likely be looking for the market to realign with the higher time frame. Obviously wait for some sort of sign that says the order flow ended before you just start buying. And here we have a very clear sign. We swept liquidity and then we violate the supply zones. Now we can start formulating trade ideas from here to go on up and match the daily and 4 hour order flow. And ultimately this cycle just repeats over and over, where we just keep trying to follow the 4 hour order flow. So you're always pro 4 hour order flow or your 4 hour pullback, and you need to rewire your brain to think like that. Now sometimes these pullbacks will be quite minor. As you can see here, it wasn't much of a pullback at all. Again, we just find the last source of supply, which was this one here, which put in this last low. Once this supply gets violated, you could probably say something in here did it, and you would look to continue on up. And you're always looking to see who's in control, supply or demand. When one fails, it's usually a good sign to go the other way. So again, last source of demand that put in the high. You take another run at it. You have a failed reaction as you failed to breach this high. Instead, you come down and breach this low. You take one more run, but you still fail to breach that high. And ultimately, what you would be looking at here is something on the lower time frame to get you into the short. And this just repeats over and over, and ultimately you're just trying to always align yourself with the 4-hour trend or counter 4-hour trend. So that is how we use the 15-minute. This time frame will become quite prevalent, as you'll be spending the majority of your days sitting on the 15-minute, and most of your trade ideas will come from the 15-minute. I don't spend a lot of time sitting on the 1 minute. 1 minute's for execution only. So for the most part, we're always waiting for those 15 points of interest to get hit. And we just continue on with higher time frame order flow. So once again, you take these lows, 4-hour now becomes bearish. So at this point, you expect some sort of a pullback. Once 15 becomes bullish, it can be assumed that you can buy this up, at least to here. In this case, this was almost a full retracement. That doesn't always happen, but you would keep buying till something fails and tells you to stop buying. And then you would look for the higher time frame to get realigned, which happens once here. And this is something we were talking about earlier, the ranges and how they get wiped. There's nothing you can do to stop this. This happens over and over. This is how your range is created and wiped. It'll get wiped multiple times before the true move happens. This is, let's say you did formulate a buy to go back up to maybe tap here, and then you tried to short here. You would either take a loss here or a break even, depending on management, on a smaller time frame. And ultimately, you're not going to be able to predict when a range is created and how many times it gets wiped before the true move happens. So that's where management's going to come in, and that's where just accepting the losses is going to come in. It is going to happen, but if you did try to short up here because you thought the range was done and you got taken out, the next time a demand zone gets violated, you could say something here caused it, and you would find another entry in here and continue on down. You just carry on with business. With the RRs this system gets, we don't really bother with the losses as long as it's part of your trading plan and it made sense. It's totally fine. But you could see ultimately the 15 will align with the higher time frame. Then the 15 does the 4-hour pullback, and you can play both the pullback and the pro 4-hour trend. It is always noted that the pullback is going to be much shorter than the pro 4-hour trend. So that's about how we use the 15-minute. In the next sections, we'll talk about the changes of character and the flip zones and how to use it. And once we do all that, it'll likely make a little more sense to you. So we'll cut this video here, and I will see everyone in the next video.